Hi, everyone, and welcome to today's webinar on rethinking financial reporting for nonprofits. My name is Nancy, and I'll be your moderator today, behind the scenes, like helping out with any questions or anything like that. Before we dive into our presentation, just a few housekeeping notes to mention. First, everyone has been muted to limit disruptions. If you have questions, you're welcome to share that with us in that questions feature box of your GoToWebinar control panel. At the end of our presentation, if we have time, we'll go over those questions together, but if not, our lovely speakers will get with you afterwards. This webinar is being recorded, and you'll receive a copy of it along with the slide deck in an email within the next business day, which will probably be Monday. And finally, upon leaving, you'll be prompted to complete a very short survey. We love to know your thoughts about today's presentation and what other topics that you have that interest you and you want us to talk about. Leading our presentation today, we have Saltmarsh auditors Emily, Lalas and Carol Raca. And since we have a short time with you all, I'm going to turn it right over to Emily to get us started. Emily?
Thanks, Nancy. So hi, everyone. We would like to thank you for oops, I've got a little ahead of myself. So we would like to thank you for registering for our webinar, and we hope to provide you with some helpful information today. We're going to be covering a lot of information fairly quickly, but we do plan to have some time at the end for any questions that you might have. Also, please feel free to use the chat box, as Nancy mentioned, for any questions, and we will also have our contact information as well at the end of the webinar. If anything comes to mind after that you would like to reach out to us about, we would be more than happy for you to do so. So to start us off, I'm going to be going over some key nonprofit financial reporting terms to make sure that everybody's familiar with the terminology that you're going to hear throughout this presentation. So the first thing that I would like to cover is the difference between external reporting and internal reporting. So external reporting refers to the reports that are provided to anyone outside of your organization. So this usually includes things like your annual audit, the Form 990, and any kind of periodic reports that you are required to prepare and submit to grantors. Your internal reporting, those are going to be the reports that you usually see more frequently when managing the organization. So they're usually for management and board use only, and usually you'll be working with them internally for budgeting and planning purposes. So these usually tend to focus more on like the cash that's coming in and out to make sure you have enough to sustain your operations that you're trying to carry out. And one thing that I wanted to point out is that oftentimes these reports, the information that you see can be presented in a different way than it's required to be presented for external reporting purposes. So today we're hoping to bridge that gap by covering more of the external reports so that you can see how everything flows together. Another thing that we wanted to touch on are audits. So sometimes donors or grantor terms will require that an organization receives an annual audit. So there are two primary types of audits that apply to nonprofits. The first kind is a financial statement audit, which covers basic financial statements of an organization. This type of audit is looking at the basic financial statements to give an opinion on whether or not they're materially correct. So it is not a catch-all. It is not designed to monitor fraud, and so this should not be used in place of a good internal control system and fraud monitoring policy. And it is not designed to catch every small misstatement. So another reason internal controls are still very important. But it will provide assurance as to whether or not the organization's financial statements are materially accurate. The next type of audit that's very common to nonprofits as well, in particular, is a single audit. So organizations that spend $750,000 or more in either federal funding or in the state of Florida, it could even be state funding, that if you reach that threshold, then you are required to have a single audit. So if your organization is receiving a single audit, that means that you'll have your audit of the basic financial statements, but in addition to that, an audit of the government funding that your organization has spent. So there's various criteria that determines which programs are going to actually be tested as part of that single audit. And the single audit is also, it's primarily reporting on compliance with terms of a grant or a government program that you've received funding for or that you carry out. And it could result, if something comes up, it could result in findings and or question costs if it's determined that the organization did not spend the funds appropriately or was in some other way in violation of the program terms. So it's not so much focusing on the financial statement numbers as it is focusing on compliance and the expenditure of that federal money. So this is something to just keep in mind when thinking through the types of funding that you want to look at to support your activities. While the resources provided by large grants often outweigh the cost of the reporting requirements, it's still good to keep in mind that accepting large amounts of government funding does come with some extra compliance strings attached. Another very popular term that you'll want to understand when looking at financial reports is with donor restrictions and without donor restrictions. So this is referring to funds or other assets that you receive for which the donor has attached a condition that it only be used for the donor's stated purpose. So if an organization accepts a contribution like that, then that organization is obligated to ensure that the funds are spent in accordance with the donor's stated purpose. It's important to note that only donors can restrict funds for GAAP purposes. So oftentimes you'll see board designated. So sometimes management or the board will decide to designate funds to a particular program or activity or purchase. And those, since the organization could still ultimately decide to reallocate those funds, those are considered unrestricted. However, the only way that you would be able to change a donor restriction is to go back to that donor and ask for permission to spend something differently. So you could think of donor restrictions as more permanent, whereas board designations are going to be more flexible. Carol and I are also going to be talking a lot about overhead or administrative cost allocations. So when we are referring to overhead, we're talking about costs such as executive director and financial director salary, utilities, things like that that are going to be in your overall overhead cost pool that are not solely benefiting one program. However, each program's fair share of those costs should be accounted for, which we're going to explain a little bit more shortly. And another common financial reporting term is gifts in kind. So this is a contribution of non-cash goods or professional services that are provided below standard market rate. An example of this would be an accountant on your board preparing the organization's 990 free of charge, or the organization receiving free legal counsel. So another thing that we wanted to touch on is that it's important to note that sometimes you have a grant that requires community buy-in or participation. It would require a certain share of in-kind volunteer hours or services being provided by the community. And that's actually going to differ a little bit from the GAAP financial reporting requirements for something to meet in kind. So for GAAP, the definition of in kind, it has to be a specific trade or a professional skill in order to be accounted for in the financial statements, whereas sometimes grantor terms or grant reporting looks at that a little bit differently. So that's another area where you might see some overlap or some differences between how things are presented. So now I'm going to turn it over to Carol, and she will be going over the basic financial statements.
Yes, thanks, Emily. I'm going to wait for the echo. Okay. So yes, I'm going to go over how statement of financial position and other basic financial statements, specifically how donors are really what they're really looking for within these financial statements. So the first one that we're going to look at is the statement of financial position. This is essentially the balance sheet for the nonprofits. And one of the biggest things that donors are looking for here is just liquidity with assets. So whether or not the current assets are readily available in order to be turned into cash, and also whether or not restricted cash or assets with donor restrictions, whether those are high, meaning that there is less money available for other purposes. And basically the reason that they're wondering about this is they want to know whether or not what they're investing in will be able to be used for multiple different activities instead of just one activity that is taking up a large portion of the funding. Then looking for the statement of activities, this is essentially the income statement for nonprofits. And some of the big things that donors are looking for here is concentration. So is there one large donor that is essentially funding the entire organization, and will that affect the entity's ability to continue as a going concern if that organization or if that donor were to stop supporting the entity? This is important because it's good to see a large range of different donors so that we're pulling money and funding from different sources, as well as just basic revenues and expenses. So are we spending more than we are able to generate, or are we spending less? And of course, we want to be able to spend less than we're generating so that the organization can be sustained throughout a long period of time. Finally, again, some income or statement of activities are broken out between with donor restrictions and without. So again, just looking at that and whether or not those amounts of money are restricted for certain purposes, and we'll see that in a little bit. So now looking here at the balance sheet, this is an example, or the statement of financial position, which is essentially a balance sheet. This is what one could look like. As you can see, it's pretty similar to just a balance sheet for any other corporation. But for one, we have net assets organized a little bit differently down at the bottom. And as you can see, those are broken out without and with donor restrictions. And looking at the health of this particular organization, we see that current assets are high and are primarily in cash, which shows high liquidity, as well as we can see that these receivables, one are grant receivables and also are pretty low in comparison to the rest of the assets in the organization. And that brings me to a point about pledges versus grants. Just a heads up about pledges. If you do primarily source your funding through those pledges, you just want to make sure that you're able to truly reflect what you expect to collect with those pledges. And you also want pledges to usually be within a year so that it's as easy as possible to track them and estimate how much you will be able to collect with them. Finally, one thing to note here is that net assets have high amounts in the without donor restrictions, which means that there is a good amount of revenue available for any use that may be needed to keep the company healthy or the organization healthy. And then looking at the statement of activities that we have, this again looks similar to an income statement. You see that the net assets is at the bottom instead of seeing equity. Looking at the health of the organization, we see that revenues are higher than expenses. And as you can see, each expense is broken out into program services and then another subcategory of supporting services. And that will go along with the statement of functional expenses that we'll talk about in a minute. And finally, as you can see, this one is broken out between without donor restrictions and with donor restrictions. So this one, the donor restrictions, there's only 100,000 in one line item, and most of it has zeros all throughout. This is usually because the organization has already met the obligations of the donor restrictions, so those are now pulled into the without donor restrictions column. So that is just a key thing to note when we're looking at the statement of activities. Now, when we look at the statement of functional expenses, some of the main things that the donors will be looking for here is looking how things are broken out. So for program funding, we want to make sure that this is proportionate with admin funding. So admin funding is not so high that it's taking away from the mission of the organization, and that the funding is truly being spent on the actual activities that the donors want to support, as opposed to simply like admin activities like marketing or supplies or rent. But at the same time, looking at admin funding, we still want to see that funding be high enough to support the business to run a smooth operation and to attract talent when they're hiring people, to be able to market the organization well enough. So just making sure that admin costs, while they're not, too high that they're unproportionate, that they're still high enough to run the operation smoothly. And finally, looking at fundraising, just with any fundraising, we want to see high returns, so as low of expenses as we can get so that we can make the largest impact with our revenues. Looking at how the statement of functional expenses is really broken out, first you'll see in the next slide that we're going to look at with the table that most of the functional expense classification, so that is all put into columns for programming or supporting services or fundraising, and then we have natural expense classification, that is the rows below, so rent, employee benefits, supplies, and once again, this, yes, you can see it right here. So for example, salaries are split out into the different programs and how those are used, whereas they're also split out into general and administrative or fundraising. So we can see how multiple different line items are used in multiple different types of classifications. And then I'm going to touch briefly on allocation methods, but Emily will go into further depth on this. Essentially, you could use direct allocation or indirect allocation. And direct allocation is going to be assigning those expenses based on exactly what we're using. So as an example, let's say for office supplies, we know exactly how much office supplies was used for program 1, and we charge that to program 1. Or we could use indirect allocation, which is applying that expense based on a different basis or other information. So breaking up the total amount of supplies based on what was used across the teams. And then looking finally at the statement of cash flows, which is the last financial statement that we're going to look at today. This is a really good place to see where collections are, how much we're receiving, as opposed to just how much revenue we're earning. So again, on the statement of activities, as we discussed, we want to make sure revenues are higher than expenses, but here we're really seeing when those revenues and receivables are being collected. And as we talked about before, those pledges and grants, we want to make sure that we can expect them to come in and that they're also actually being collected in a timely manner. So we want to see that balance, favorable revenues with favorable collections, not just high revenues with not very high collections, so lower collections. Finally, what I want to really reiterate about everything that we're talking about today is that we want this to be consistent. So we want to see consistency from the statement of activities to the statement of functional expenses to the statement of cash flows, which means that we want to see the same titles, the same names being used throughout so as not to confuse the user. And that is all. I'll hand it back to Emily to dive deeper into cost allocation strategy.
Thanks, Carol. That was great. So one common thing that donors are interested in is the portion of the organization's funding that's going to be going towards programs or services versus administrative functions. Therefore, it's really important that costs are properly allocated to reflect the true amount that's being spent on each program. So the goal of your cost allocation plan is to allocate costs in a way that you're going to be able to see the true costs of operating each program that your organization carries out. If costs are not properly allocated to each program, it can be difficult to determine the funding that's needed to continue the operations. And it could also potentially become difficult to demonstrate the true use of resources and the true needs that a program has. So there are several ways that organizations can allocate costs, but the key is, again, to be consistent and to have a well-documented plan, including your rationale behind that allocation plan. So some organizations may determine to pull together all of the overhead costs and to allocate maybe pro rata to each program based on each program's ratio of cost to total cost. Or you might decide that certain costs benefit programs disproportionately, in which case expenses would be looked at in more detail, and management would document a percentage of maybe each cost pool or each salary in some cases, if there are large salaries, to be allocated to each program. So for example, in nonprofits, we understand that employees are often going to be wearing several different hats. So you may have a bookkeeper that also helps with a community education program. And therefore, when you're looking at that bookkeeper salary, you might determine that 50% of that bookkeeper salary really should go to the education program because their time that they're being paid for, half of it really is benefiting that program, whereas half of their time is only dedicated to the bookkeeping portion of their job. So you don't necessarily need to get too detailed into the expenses, but it would be good to consider a methodology that's going to result in the accurate and the most accurate allocation while remaining practical and cost effective to implement. So this is a really good subject that if you are unsure of your cost allocation plan, or you would just like somebody to review it and maybe give some feedback, this is a great topic to bring up with your CPA and to have them be looking at with you. One other thing that we wanted to point out is that it's very common to see grants that will state specific percentages of total overhead that can be charged to a grant. So when this occurs, although the grant might only cover a certain percentage, it's still important to develop an independent cost allocation plan for financial reporting and internal use that can show the program's true share of overhead costs, regardless of whether or not those costs are going to be covered by a grant. So this can help management and fundraising personnel determine if you should be exploring additional funding needs for any of the various programs. Also, just as your organization is continuously evolving, you want to make sure that you're reviewing your methodology often, at least annually, and that you're updating it to continue to be as accurate as you can be as your programs evolve or positions within your organization change. Next, we're going to go over the 990. So this is the second big external financial reporting requirement that, that nonprofits have. So just some general background information about the 990 is that this is an informational return that if you're a 501c3 organization, you have to file some version of this. So you might only file, if you're a smaller organization, you might only be filing a postcard or a 990 EZ. And if you're a larger organization, you may be required to file the full 990. But every organization does have a requirement to file a version of this with the IRS each year. All 990s are also open to public inspection. So there's actually a database in the IRS on the IRS website that anyone can go to and can search any nonprofit and be able to pull up their 990 and see the form and all of the supplemental schedules. So large donors, they'll sometimes, request your 990, or, it's requested with grant applications. And so what they're going to do with that is they're going to analyze the information that's reported in that before they're committing to grant you funding. So when prepared correctly, the 990, it can communicate a lot more than just hard financial data. There's a lot of opportunity to tell your organization's story through it and to really communicate what you're providing to the community to the people that are going to be using this. The first thing that we also feel like would be a good tip when preparing the 990 is to make sure that all of the information presented in the 990 is consistent with the information in the basic financial statements, as well as the way that your programs and your services are marketed and described on any of your organization's publications or online content. So that's, again, what Carol was touching on. If you hear nothing else, the one thing that we really wanted to communicate to you is that consistency between all of your reporting is so important and can really help to seamlessly tell your organization's story to people that are looking at those reports to learn more about you. The basic key metrics of the 990, the basic part of the 990, those are going to be very consistent with the metrics that Carol discussed earlier, of course, with a high focus being placed on those allocation of how the organization is spending money and the types of resources that you're bringing in. We also wanted to point out that when prepared collaboratively with individuals within the organization, so maybe including marketing or your executive director reviewing, but taking the 990 review and preparation beyond just the fiscal department or the accounting department can be really helpful to make sure that you're getting a lot of comprehensive information in there. So that you can paint a really clear picture of your organization's funding and your programs and your historical accomplishments. Some other need to know items, of course, these are open to the public, so we wanted to make sure that you know that these things are disclosed within your 990. It discloses information about the organization's governance, so a listing of all of your board members will be included in your 990. You're required to disclose salaries or payments that are made to key employees and board members. That would also be the same for related party transactions. Your key contributors are disclosed within the 990, and donors can use the narrative information, which we'll cover next, within the 990 to determine if your activity is really aligned with your stated purpose or your mission and with the mission that the awarding agency is wanting to accomplish by awarding you funding. So getting into the narrative schedules, this is where you really have an opportunity for storytelling opportunities. So even if your organization is smaller and files a 990 EZ, you can still file some of these supplemental schedules with it, and you can utilize those to still tell your story. So before we get into the types of schedules where you can do this, it's really important that you have that less isn't always more when you're adding information to these schedules. So sometimes when people think financial reporting, they think we should give the bare minimum, and it's not really that generously shared. But when it comes to nonprofits and 990s, if you share more information, you're actually really selling your organization more. So some things to consider when you're preparing all the narrative schedules is kind of 4 points. So who did you serve? How many people did you serve? What did you provide? So what kind of services did you provide or goods to the community? And how did those services actually impact the people that you serve? So if you're able to communicate those things through your narratives, you're really going to help donors and grantors and anyone that's looking at this 990, you're really going to help them be able to see what you're about and the impact that you're having and the scale of the impact that you're having on your community. So the first schedule that I want to go over, and this is really the biggest opportunity in my opinion for storytelling opportunities, is Schedule O. So this schedule can really be used however an organization would like, and you can use this to provide more detail about any of the questions or financial information that's presented in the basic form. So when I'm saying basic form, I'm talking about your balance sheet and income statement and basic questions that are asked on the 990 that are not included in a schedule. So this is also a great place to clarify anything that might be abnormal that year or that might raise questions, such as if you're fundraising, contributions were really low in 2020. Maybe you use Schedule O to explain why, which for many organizations that would be an impact from COVID. And then you could even go as far as explaining what your response is to those, what your response to that change in fundraising strategy is in light of COVID. It can also be used to bring attention to any new services or programs or accomplishments that you've implemented throughout the year. So here's a snippet from a 990, and this is part 3. So this is part of the basic 990, and this is where it's asking for the statement of program service accomplishments. So it's wanting you to describe your organization's mission, and then it's also asking about if you've changed any of the services or programs that you're operating. And it also says to check here if Schedule O contains a response or a note to any line in this part 3. So even though it looks like there's not much room here, or they might be asking just for, the bare minimum information about that, you can check that box and you can really expand as much as you would like to provide more information to the users of this in Schedule O. Another place, and this is still in part 3, is it asks for the program service accomplishments for each of your 3 largest program services as measured by expenses. So it's going to ask for your program, your expenses, it's going to ask for the grants and the revenue that program brought in. And so again, that's bare minimum information, and then you are expected even in the basic form to explain it a little bit, but you can also utilize Schedule O to go into more detail to really communicate what you're providing through that program and what you were able to accomplish and what your reach is. The next schedule that is good to expand on is Schedule I. So this is the grants and other assistance to organizations, governments, and individuals. So you can use this to highlight the funding that you were able to provide to others throughout the year. And another thing that I wanted to point out about this schedule is usually when we're thinking of users, we're thinking of people that are going to give an organization money. However, some organizations, they exist because they want to give money to other organizations that are related to their purpose, and they might be acting as a fundraising entity or a foundation or something like that. So other organizations that are seeking funding from you, they will oftentimes pull your 990 from a database or a fundraising database that pulls it from the IRS, and they will actually look at these schedules to see the types of grants that you're giving out, the amounts of the funding that's historically been awarded, and then they'll use that to determine if they're in alignment with your mission and if they should request funding from you. This is just a snippet of that schedule, and so this is where you would list the grants that were given and then some basic information about just the amounts and everything that was given out. And so that is, in general, the brief version of some of the ways that you can use your 990 to really just communicate your organization's mission. And hopefully this was able to help you see how to tie everything between the basic financial statements and the 990 and, kind of your strategy together, and hopefully able to help you think of some new ways to look at this when you're looking at your reports next. So it looks like we have about 4 minutes left. So we did want to stop here and just provide a little bit of time if there are any questions.
And it doesn't look like we have any questions. Thank you so much for joining, everyone. Emily, I don't know if you want to go into anything else.
Nope, I think we'll end it there.
Awesome. Well, thank you guys for all joining us, and thank you, Emily and Carol, for a very informative session on everything in this nonprofit space. As mentioned before, today's webinar was recorded, and everyone will receive a link to that recording along with the slide deck links in your emails in the next business day. Be sure to check your spam and junk folders in case it lands in there due to security filters. And as a reminder, after the webinar, whenever I close everyone out, don't forget to take that survey and leave us your feedback. We love to know what you thought about our presentation today. And if you have any further questions, please reach out to us, Emily, Carol, another member of our audit or nonprofit team, and we'd love to get back to you. So we hope you guys have a great rest of your day. Bye.